Our next speaker is Mr. Raghav Iyengar, President and Chief Business Officer of Axis Asset Management. Raghav is a well-known figure amongst MFDs, holding very senior positions in his earlier assignments with ICICI Prudential AMC and India Bulls. A chartered accountant, he has deep insights into the sales and distribution business. His presentation is titled India 2047. Slide number 1 and slide number 2 are very important for all of you. Slide number 1 is if you invest today in Axis Equity Fund, what is the return you will get in 2047? Slide number 2 is commission structure of 2047. Ashte alla sir nambeko. Okay. So over to you, Raghav. You have high expectations.
Namaskara. At the back, please. Last row. That's the middle row. Thank you. Good morning. Good afternoon. This is a very awkward slot actually. You know, in Bombay, 12 o'clock means 12 baj gaya. You know, 12 baj gaya means it's not a topic I like to talk about now, but maybe over drinks in the night I'll tell you what it means. So, I think Harish was very kind in his introduction. I'm an accidental mutual fund guy. About 24 years back, my then boss in ICICI picked me up from distribution and brought me into manufacturing. I was amongst the first 5 or 10 people to join the erstwhile Prudential ICICI. And at that point of time, I remember in 1998, I think there were many of you who had boards outside your office that dogs and mutual fund salesmen are not allowed, because we did a fantastic job of managing people's money. I think the best performing fund had an NAV of some 4 rupees. Face value rupees 10 to be clear, not 1, right? And from that day, I mean, from where we are to that time and today, it's been an absolutely remarkable journey. Also, around the same time, I was invited to speak in a conference, and it was a very interesting conference. It was a cooperative bank manager conference. I think it was somewhere in Tumkur. And I was all ready like this, all decked up, suited, booted. I was a little thinner, of course, in those days. And then, like a very smart guy like Harish came and told me, sir, ನೀವು presentation kannada ಮಾತಾಡಬೇಕಾಗಿದೆ. And I said, hello. I had just moved, actually, about 2 years back from another place. I didn't know Kannada at all. So I said, I don't know how to speak Kannada, and how can I explain mutual funds in Kannada? I don't think I can even explain it today, after being in the industry for 20 years. He said, sir, don't worry. Just say, namaskara, chanagidira. Chanagidira? He said, everybody will say, chanagidiri, and then you can start, right? So today I have a very interesting topic, because 2047, maybe I'll be possibly closer to 80. Of course, I hope to be working at that time, because I think today's theory in life is that the new 60 is actually 80, and the new 40 is 60, and I think the new 20 is whatever the 20. So maybe someday, 25 years down the road, some of you, if you're taking notes, please make notes of some of the points I'm taking. And then maybe Harish will call me on stage and say, Raghav, what you said was nonsense, or what you said really came true, right? So it's a fairly data-centric presentation. I mean, I know I'm sandwiched between, I know I have a time constraint because I can see my clock ticking here. So I want to go really fast on this. There are a lot of slides. But yeah, this presentation is available to, NASDAQ. I keep getting confused with NASDAQ. MAFDAQ, right? Camfa was good, but now this is the new. Okay, good. It's international. Okay, this is international. Okay. So forgive me if I keep saying Camfa, because I'm a regular at your Camfa events. Huh? Camfa time up. Okay, so MAFDAC, right? Great, cheers. So thank you very much for getting me on stage. I think, and by the way, it is exactly the way you pictured it in the presentation when you came to my office 1.5 months back. And I was wondering at that time, why are you wasting time and coming to my office? Because I'm anyway there. I'm the furniture in your system. I think if I see last 10 years of Camfa, ex-Camfa, I've been almost a permanent fixture here. But I think you were kind enough to do that. So let's start. I hope this is moving. How do I point something? It's not moving, sorry. Try now. Okay. So we just do a quick flashback, because what happens is, we live life by the day. Some people are smart like you live life by the quarter. my life, it's a bit of a day-to-day thing because mutual funds are a daily slog, right? And we need to see some data, right? So today, everyone knows this. We are the largest democracy in the world. There are 92 crore voters here. What that means is practically the entire population of many countries is actually our entire voting strength. Registered voters. We are amongst the top 6 economies. I think that could have gone up and down. I think UK and us are very close to each other. So we may be in the top 5 as I'm talking to you. These two things are very interesting. I think if you see this, just go here. I don't know if you people can see this, but our forex reserves are only $1.82 billion in 1951, right? That's the kind of FI selling that happened last month. That was our entire forex reserve in just 60, 70 years back. Today it's roughly whatever, $600+ billion. And this is beautiful. This is the national highways. Of course, this is where, if you remember, the golden quadrilateral started, went here. And then, of course, this is the last 4 years of the current government. And if you travel all over, like I do a lot, you will see roads are really, really, really better right now, right? Look at this. I think these are some very interesting data points because quality of education, quality of population is measured by education, right? So there are now 1,000+ universities. We have a long way to go. But just look at that graph. Again, last 20 years, look at our literacy rate. We had hardly, this is male, female, which very, very important. This number is actually the most important number for me. Because if there is female literacy, automatically overall literacy in the country goes up, right? And look at this, it's now gone to almost 65, 70%. There is a huge number of people, you know, Beti Padhao, Beti Bachao. That slogan is really now really in fire. Today, a girl is no longer looked upon as a liability. A girl is looked upon as somebody who is actually your future. And that's visible in the education, right? Now look at this, I think, passenger traffic, airports. Of course, we only see the bad side, come 3 hours earlier, come 4 hours earlier. But just yesterday, I was looking at some data. You know, 10 years back, the proportion of people traveling by train to aircraft was roughly about 900 to 1. Today, that number is about 77 to 1. What that means is that the number of people flying, transportation is fantastic. Cargo handling is gone up by airports. Used to be hardly anything here. And obviously 33, it's almost up. Everything is up 25, 24, 25 times in the last 50 odd years, right? This is another very, very important slide. I think this used to be, I mean, if you look at this, almost out of every 1,000 babies who were born, 150 babies used to not even live to be 1 year old. Now, that number has actually come down. We are at a global this thing. And this all we don't see. Why am I boring you with statistics early in the morning instead of giving you some pep talk? Is that we are so used to our daily life, our daily traffic, our daily reconciliation, our daily SEBIs, our daily AMCs, our daily markets. Some of these numbers we just miss out. And look at this, I think life expectancy. This is very, very important from a retirement planning phase, right? Today, a male is expected to live at least till about 71 years. And if you look at urban male population, that will be at least 75, 77 years. So these are all huge opportunities for all of you in this room, okay? Now look at this, I think even in sports, I think this is Olympics, Asian Games, and Commonwealth, the 3 big sporting events which India participates in. I think if you look at, go back to independence, 1948, 1952, 2 medals, we're down to about 7 medals gold. A lot of work to be done, but sports is now a very big, in fact, I don't know if you know, Bangalore has possibly the first private sports university in the country. I don't know, it's, I think in South Bangalore somewhere, Jain University. My son was a national level swimmer. We almost put him there. Then, of course, unfortunately, my South Indian buddhi took over, and then we pushed him into what I am doing right now, which is, okay, we'll figure out 20 years later. But look at everything else. So what I'm trying to say in the last 5 slides is that without our knowing it, there has been huge amount of progress in the bottom line, top line, mortality rates, both monetarily, mentally, infrastructurally, huge progress here, right? So this actually was the one that got us huge global prominence, right? Suddenly, out of the blue, what did people remember in 2020? COVID, extremely tough times. I think this event is happening first time after COVID, right? So I think my compliments to all of you, because I think from a 0, you have come to 600 people in the room. It's an absolutely outstanding administrative and organizational achievement. But If you remember March 2020, the doomsdays, and I have some newspaper reports, I couldn't find it, so I couldn't put it. But at that point of time, with the infection rate in Europe, people put the infection rate of Europe, I remember it was some 80 people per 1,000, and they said if we translate that into India, you will have something like 100 million people dying, right? That was the number that was there. I think finally the number turned out to be less than 1 million. Even if you say some fudging is there, million will be maybe 4 or 5 million. That has happened because of this. I think this is fastest and most effective vaccination. So when people ask me the India-China difference, I don't bother about anything else. I mean, people show me photographs of the railways, the roads, the infrastructure, the tech. I just show them this slide. It's like, they had the vaccine in China got developed first. They were the first country to develop the vaccine, if you remember, which was made by a company called Sinopharm. And that vaccine, now we realize today, with all the mess that is happening in China, that vaccine was only 70% effective. Which is why even people who have got the double dose and even a booster, there is yet a very, very good chance in China that somebody may be having COVID. Whereas in India, we had a 90+% efficiency rate. That's why all of us are sitting here. I mean, 1.5 years back, if we had done this, first of all, we would have not been able to do this, but I would have been staring into a room of masks. I would not know who the hell is who. Today, okay, I don't see any masks at all, right? And I think that's the situation everywhere. I mean, whether it's in an airport, whether it's in a hotel, everywhere. This is largely that, right? So this is our report card, as we call it. I think we were 10th. We are now GDP 5, 2.6, 3.2. Share in global trade has not moved. That is because we are not very big in manufacturing. Auto production, number 4. Steel production, number 2. Number of startups, number 4 to 100. I am told out of that 100, about 35 sit in Bangalore city. Congratulations to all of you. So something in your water is making you unicorns. I am very happy. I think we have to find a way to get Kaveri water to Bombay to get more unicorns there. Ease of rank, how difficult it is to start and keep a business going. We have come down to 63, long way to go. And of course, Nifty, which I remember in this level in 2014, when the index hit 5,000, and I remember Ashish and I were in the same company and we saw a lot of redemptions. And the standard question at that time was, boss, Nifty has reached 5,000, it's an optical level, abhi nikalna chahiye. That is the tragedy in our life, that if people had actually forgotten and not seen this Nifty and all these funny numbers that the newspaper and TV channels keep talking about, I think people would have been far richer today. I mean, 3 times appreciation in hardly 8 years, right? So now what do we do? I think if you see it, I think what do we see in the next 30, 40 years? And more importantly, what is it for all of us, right? I think one model we can look at, I think, is the United States, right? And you will say, Arey, what nonsense are we talking? I mean, we are a $3 trillion economy, they are a $15 trillion economy, but there are a lot of there are a lot of similarities. Tumba similarity there. I'm going to try and talk Kannada a bit. If I'm talking nonsense, please pick up a bottle and throw it at me. Okay? Tumba similarity there. Why is there similarity? They are the oldest democracy in the world. We are the largest democracy in the world. They have a young population. Of course, we also have a young population. And they've done something to their economy, which I think we are also now doing, right? What did they do? They built their railroads and networks in the late 18th century, 19th century, right? Their telegraph, which was communication, was largely functional in 1900. So US and India, big similarity. US is the second largest country in the world, second or third largest, if I'm not mistaken, by land area. India is the 7th or the 8th largest country by land area. So huge population, huge area, landmass. How do you connect? You connect through rail and you've connected through telegraph. And then, of course, they were the first people who built the motor car, which we are all driving today. Model T Ford, the old antique cars, which is there. That started off mass production in the late 1930s and 40s. And all these 3 put together actually gave US the dominance that it enjoys today. In the last 100 years, I'm not talking of 500 years back. This is 1880, 1900th century to about 2022. So in the last 100, 120 years, these 3 are the biggest contributors to the US economy. There are lots more, but these 3 were the ones that really pushed. What's the difference in what is in our sense? Same thing. We have a huge transport system. I showed you the number of, the pace of roads that have gone back. If you remember my previous slides, amount of highways being constructed. We have a lot of banking system reforms because for any economy to grow, you need a very robust financial system. You have JAM. Anybody remembers JAM? Digital India, and of course you have a lot of tax. So I'm going to spend 3 minutes on each of these. So this, India now, GST collections, you know, are 150,000. We used to have the highest corporate income tax rate in the world. We have now brought it down to 25%. If you're a foreign company, you pay 35%. So today, for a new company, up to 100 crore turnover, in fact, it's much lower. So tax reforms have happened. GST has happened. Now, GST is a very, very interesting thing because many of your clients will get actually worried because of this, right? You know why this happened? DGCI bus syndicate issuing 3,200 crores. This is tax collection. So today that whole triangulation has happened of data. So if I am a company, my PAN code, or if I'm an individual, my PAN number, my Aadhaar number, GST is all linked together. Very, very difficult for people to find anything. Right now, I don't know if you're aware, about 3 months back, there was a very big story in the market about how insurance companies used some not correct methods to pay commissions. And they caught it because of GST, because of GST evasion. That amount is roughly about 2,500 crores. The amount paid was 4,000 or 5,000 crores. GST evaded was about 1,000 crores. So this triangulation of data is now easily available. I'm sure many of you how many chartered accountants in the room here? Yes, one. Sir, you would remember AIS this year. I'm sure you would have found a lot of customers who never used to report their mutual fund transactions suddenly have become fantastic investors. Including SB account interest, FD interest. Many people did not even know that they had some money in their account. And that happened how AIS. How did that happen? PAN linking to Aadhaar. Very simple. PAN, your broking account, your mutual fund account, any financial services account is linked to Aadhaar, and that the income tax now has a full-fledged this thing. Many clients I know, because I have some very good CA friends in Bombay, they said they are receiving notices automatically. Because your income you're declared is X, your investments are much higher than what you should have had. So collections of tax is now very, very efficient, very robust, right? Look at this, I think the communication everybody knows. I think how many, actually we have now roughly 2 phone connections now per almost every individual, right? And I don't remember when I came to Bangalore, 97, 98, my father was in, actually I came to Bangalore, 92, 93, and I was doing my CA in Bangalore. My father was in the Middle East. And to give him a trunk call, I had to go from my house in Banshankari to Jayanagar 4th block, right? And there was a PCO there, and he used to give us 5 rupee dhappa coins, you know, and we had to keep putting those coins in and keep talking to him, right? That was the difficulty. Even though we had a phone at home, we did not have an international connection. Look at the communication today. I mean, today my son studies in Europe. He's actually talking to me more than he was when he was in Bombay. So I think he misses me a little more now that he's there. But this is unthinkable. And this has all happened in 20 years. It's not happened over 100, 150 years. So point I'm making with US, you have higher taxation, you have great connectivity, you have great roads, and then you have this great national logistic policy connecting waterways, railways, roadways, all put together. Connectivity is going up, right? Banking system is another big, big change. I think we've had 10 years of big, high stress, and it's already starting to come down. So today, from something like $160 billion, it's now down to maybe hardly 30, 40, 100, less than 100 billion, which is nothing compared to an economy of India. So the point I'm making is that we are in a fantastic situation. This actually is the biggest innovation for all of us, because now technically all these people are now your potential investors. Right? They are all your potential investors. Because now sitting in Bangalore, you can send out a WhatsApp to 100 clients of yours saying, hey, I saw this presentation, I think you should invest here. Click this link, and within about 30 minutes, your transaction will get done. Correct? That was not possible 20 years back. 20 years back, I think our biggest advantage as an AMC or business was that we were able to give you a check the next day. Today, nobody talks checks. Everything is... Access receives 95 to 96% of its subscription electronically. It doesn't even come to our office. It just goes in, account statements come back. Money gets in, money goes out. We had redemption payments on 31st of December, totaling up to about 11,000 crores because it was the quarter end. By 7:45 in the morning, money was already credited to the customer's account. So this is the kind of technological improvements that are there. Unfortunately, we don't see it. We use it, we feel happy about it, we don't think of the past, we say, "Arey, now." So now today, if my customer, a corporate customer, does not receive his money by 9:30 in the morning, he starts getting worried. There was a point of time where that customer would get his money at 3 o'clock in the morning, the same liquid fund, the same redemption. But today, if he doesn't get it by 9 o'clock, he's getting worried, right? This is your potential, 50 crore accounts, 175,000 crores, 1,75,000 odd crores of assets is sitting in deposits over here, right? DBT now, today government has got money. You know, today they have put out a food policy. The bottom 10% of the population will automatically get a food subsidy. We all know 20, 25 years back, there used to be huge leakage. 100 rupees used to be sanctioned, maybe 5 rupees used to reach the final customer. 5 to 10 rupees. And this is an old problem. It's nothing to do with the government. I think it's just that the system has become so efficient. Now out of every 100 that goes, 100 rupees goes directly into the person's account. This is UPI. I think today, I think the biggest fear that most of us have in the morning is that I don't think anybody will be worried if they leave their wallet at home, right? I think, but if you lose your mobile phone or you misplace your mobile phone, I think that your entire life is going to a standstill because your phone is actually now your wallet. And this we talked about 10 years back. I remember in an erstwhile CAMFA current MFDAC meet, and I said, this is what will happen to payments. It was looking very, very super futuristic now, but look at the number of transactions today. I mean, we have now amongst the highest in the world. Everybody, including my vegetable guy, my auto guy, my Uber guy, everyone takes money happily through QR code today. And it's very safe. Frauds are increasing, but it's so convenient, right? So today, this is our growth drivers. This is a fact. I mean, we have PLI, we have Young, we have financialization of savings. I'm not getting into this because I think the PLI, we need manufacturing. Today, the tragedy of our life is that we are overly dependent on service as part of our economy, and Bangalore specifically. So today, it's actually quite sad. When I was, this year, we will hire about 40 trainees in Axis Mutual Fund. And we have Tier 1, Tier 2, Tier 3 colleges, right? So let's say Ashish's college would be a Tier 1 college. No problem to get jobs. In fact, there it's only how much, what's your first day salary, right? Tier 2, slightly easier. Tier 3, no jobs. What is the starting salary of those people? Tier 3 with an MBA, postgraduate MBA with a graduation degree is about 4.5 lakhs a year, right? 5 lakhs a year. It's nothing. I mean, if you go back and think that sometimes the kind of money that our house help and drivers make today is about that kind of money today. So we need manufacturing. I think government has done a smart thing by coming up with PLI. I think we have this demographic dividend. We keep forgetting about it because, and I have to remind you, because at one stage in the next 5 years, almost 50% of the global workforce will come from India. It's already there today. Today, if you go abroad, let's say, I don't know how many of you have traveled 10, 15 years back. If you go to any part of the world, Tier 2 city, let's say you go to Berlin, for example, 20 years back, very, very difficult to get vegetarian food. You go to Bangkok, you will not get vegetarian food. My son was in Berlin over the New Year. He sent me a photograph on 31st night. Look at the dinner I'm having. Can you guess what the dinner was? It's quite a stupid thing to do, but he did it anyway. He was having paneer butter masala and naan. Right? In Berlin, sitting in the square. That's Indianization. That is your young demographic crowd. Because we are all over the world today. In the right way, we are not immigrants. We are there as contributing to that country economy today, right? So this is the big one for all of us, and I think you guys must take a very, very big round of applause because I think this is you. This is 31 to 48. It's not a joke. 16, 15 years hardly, and you have changed the way India is saving today. So today, I don't think any new person who's coming into the job market is really looking to buy a house or buy an insurance policy. I'm sorry, that's a fact of life. When I started my career 25, 30 years back, the first thing my father told me is go buy 2 insurance policies. The IRR, unfortunately, of that insurance policy is about 4.5%. Tax-free, but it's 4.5%. I was telling my father, if I put that money into just any stock, right, it would have just been maybe 20 times more. I think the current generation understands that. So I think today there's a huge amount of financialization that's happening. So this is what we will be. I think we'll be amongst the top growing economies. We'll be the top 3. We'll have possibly a per capita income of $30,000. That puts us in the middle tier of the world. And hopefully we'll be one of the manufacturing hubs of the world. We will not be the manufacturing hub because China is way ahead of us and they are way, I think it will take, either they will have to make some more mistakes or we'll have to do something fantastic. But there's always a number two. It's good to be number two here, right? This is a little complicated slide, but people ask me, where do you think the Nifty will be in 25 years? And this is important for you. Just back of paper calculation, today Indian economy is $3.2 trillion. If I convert that to INR, it's about 240 trillion. Today our market cap is about 3.4 trillion, right? Market cap of Nifty is 143 trillion. Nifty level is about 18,000, correct? There is a CII report, in fact, today one of the largest, Vivek Devroy has put in the paper today that he expects Indian economy to be $20 trillion. He's an economist, I am a sales guy, so I will be more optimistic. There is a CII report which talks about Indian economy being between 30 to 40 trillion dollars in 2047, right? The same formula I apply, 80% is the average market cap to GDP. If you take roughly 50% of that is the Nifty today, and I apply the same ratio, the Nifty can be 2.75 lakhs. This is mathematics, it's nothing different. Now you will say this is impossible. How can it be 18,000 becoming 2.75 lakhs? It's not very high. It's a CAGR of only 12%. Now you will say if 12% is very high, I say I don't think so. Because that 3.2 to 35 trillion is only a 10% CAGR. Now what is 10% CAGR? Why is that 10%? India will grow at 6%, 5 to 6%. Any doubts? 5-6% growth in economy, average. Some year we'll grow 7, some year we'll grow 4, but average will be 5-6%. Inflation will be 4-5%, right? And that 10% of 3.2 trillion is $35 trillion. So it's just simple mathematics. Now just imagine what will happen to your income. This is the Indian GDP. This will go from 240 to 5495. This is MFAUM, roughly 40 lakh crores. Just taking the same formula, this will become 879,000. So even if I take market cap here, it will become 2198. So my belief is that right now your earnings over the next 25 years, if you do nothing with your assets, you do nothing, and hopefully your clients do nothing, that's most important, your income will grow by 25 to 55 times. That's a big amount of money all of you are going to get for keeping your clients there. So just think about it. I mean, this is sometimes the objective of this whole presentation was to sort of just show you where the larger number is, right? We get carried away by a lot of things, right? But all companies don't create money. That's a fact, unfortunately. The bottom 50 of the 500 have actually given you negative returns. So even though economy has grown, Nifty has grown 16%, many companies have not grown. I think clearly here stock selection is critical. I think very importantly, risk is important. I think quality is something that Axis believes in. I think it's a great long-term, it's a fantastic long-term way to create money. It's very, very simple, easy to explain to customers. Buy a good company, keep monitoring it. As long as it's delivering the number that you want, hold on to it and let the market do the rest. Some years, like what happened last 2 years, market may not recognize it, but when it does recognize, it will take off, right? And these are some examples that we have put over here, how low return on equity, high return on equity companies do. And of course, look at this. This is where you have a problem. Unfortunately, many of our investors don't make money. Why is that? Because only 22% of SIPs in India continue beyond 5 years. So we sell SIPs as a 10-year, 15-year, 20-year option, but unfortunately only 1 out of 5 customers keeps money only for that also beyond 5 years. So many of you are not able to identify with my 2,75,000 Nifty target. And the best thing for someone like a customer to do is just put money, regularly invest and forget about it. Don't get into this. Let the fund managers do their job. Let the experts do their job. You do the job of making sure that you keep as much money invested as long as you can. Right? This is mathematics again. If you had 100 customers giving you 10,000 SIP for 20 years and an average return of 12%, and let's say I give you a commission of 1%, which Harish talked about, your total trail commission after 10, 20 years will be 6.4 crores. 6.4 crores. But in the first 10 years, you make only 95 lakhs. The next 10 years is where you make the balance 5.5 crores. So what I'm trying to tell you is please keep your customers invested. Don't get carried away by fads. India is a super growing economy. I think there's lots to do here, right? I know I'm running short of time, but this is the other thing I'd like to leave with you. Many of us in this room are SIP specialists, retail specialists, HNI specialists, and we focus only on funds and SIP and SIP and SIP. Nothing wrong with that. But please look at it. India, your clients are getting very, very rich. In the next 5, 10, 15 years, your clients will be much richer than what you imagine them to be today, right? And they will start looking at new things. Today, if you see, alternate investment funds has gone from 5 lakh crores to 30, 35 lakh crores. Very, very quickly. PMS is now roughly 6x growth. You have to participate in this. There is no choice. You have to learn. This is another big one, my favorite topic. Today we have I call it an FD killer, target maturity funds. Yes, low commissions, but if you go to a bank, if you go to a retail customer and say, this is the YTM of the portfolio, you keep money for 5 years, mostly you will get approximately this return. I think it will see a big amount of money. This category in the last 12 months, target maturity funds have collected 100,000 crores. And most of them, 50% of them are retail. So many people tell me, no, that is all institutional money, that is Reliance Industries, that is Bajaj, that is L&T. Not correct. 50% of them are doing it. Many of them may be your customers. Maybe you don't even know. So please look at their portfolios and try and move some of this out, right? I think the millennials, I think many of us have this worry of dealing with millennials because they are very demanding, they are very tech savvy, but yes, I think they are not the type who want to use forms anymore. They want you to go with a tablet, explain to them on the screen, click twice and then they are there. That is why the fastest growing customer acquisitions in mutual fund industry over the last 5 years have been fintechs. 3 of the largest of them sit in Bangalore. Do you remember which ones? Any idea? Grow, Zerodha, Paytm. Paytm, of course, has closed down its office. They don't have an office anymore. Can you imagine? Company like Paytm, money doesn't have an office. They are all dispersed. CEO of Paytm sits in Goa. Chief Marketing Officer of Paytm sits in Chandigarh. But they yet do many more customer acquisitions than this. And they are small. They start with 500,000, 2,000 rupees, but they are slowly, I'm seeing that the number, their wallet share is increasing. So please, and most of their customers are millennials. So please focus on this segment. This is the earnings landscape. I think if you add one AIF account every year, only one customer, 1 crore per year over 5 years, what you will make in 9 years, you will make in 5 years here. So you have to, and I'm repeating, you have to open your eyes here. In Axis, we are very clear. We have a frontline mutual fund business. Quality will drive our equity vision. Debt will be competitive, but we also run 5 different verticals with very senior people equivalent to Jinesh and Shiva running those verticals in quant, in real estate, in credit, in private equity, and in something called turnaround. And we'll come to you separately in that, but you have to open your mind. Many times when I go and meet my IFA friends, they say, no, this is not for us. This is for bankers. This is for wealth managers. You are all wealth managers. Because I'm telling you in the next 5 to 10 to 15 to 20 years, your customers are going to get very rich. And if you don't know that product, somebody else will give it to them, right? So this is my last slide. Thank you. I think time's up. I got it again. You guys have to be a bit smart. You have to embrace digital. I think all of you are doing it. I think you have to leverage existing clients. This is very important. I keep talking about it. We concentrate only on 10 to 15% of our clients. What my friends in the fintech world do is that they do a lot of data mining, and that's available to you. I mean, the data tools which are there for them is available to you. You are all smart people. You all are sitting here for 1.5 days, 2 days to learn something. Do some amount of client referral, some amount of client engagement, and you will be extremely surprised at the number of kind of things that you will get there. And then, of course, I think is all ready. I think you have to embrace many funds. Thank you so much again, Mavtak. Thank you. It's been an absolute honor.
Thank you.
And my vision for 2047, and I'm sorry, Ramesh, I'm going to put a target on you because that's what I do best, right? My team fires me for that, is that I think the 2047, we should have this in Kantirva Stadium, right? With that, I hope Kantirva Stadium is bigger. Instead of 600 people, I would love to address or rather be a part of 10,000 people at that time. Thank you again very much.
Thank you.